A pleasant morning to the young, energetic learners. Today I'll be handling Income Tax Law and Practice 2. I'm Dr. Shobha, Principal, Associate Professor and Head of the Department of Corporate Secretaryship, KCS Kasinada College of Arts and Science, Chennai 21. Today I'll be handling assessment of individuals. The rates of income tax as applicable for the assessment year 2019-20 is as follows. For individuals below the age of 60 years or Hindu undivided family or every association of persons or body of individuals, whether incorporated or not, or artificial judicial person. So it is as follows. For the first 2,50,000, it is nil. For the next 2,50,000, it is at 5%. For the next 5 lakh at 20%, and for the balance at 30%. In case of every individual being a resident in India who is of the age of 60 years or more but less than 80 years at any time during the previous year is called as a senior citizen. So now, who is a senior citizen? The SSE who has completed the age of 60 years but not 80 years of age is said to be a senior citizen as per the provisions of Income Tax Act. So the slab rates are as follows. First 3 lakhs nil, next 2 lakhs at 5%, next 5 lakhs at 20%, and the balance at 30%. So this is the tax slab for a senior citizen. In case of an individual being a resident in India who is of the age of 80 years or more at any time during the previous year, the following tax slab applies, where the total income is less than 5 lakh, it is nil, next 5 lakh, it is at 20%, and the balance at 30%. Surcharge of 10% is payable if income is above 50 lakhs and less than 1 crore, and the same surcharge is at 15% if the income is above 1 crore. What does this health and education says? It is a levy imposed on total tax computed under the provisions of Income Tax Act. It is to be levied at 3% as education says and 1% as secondary and higher education says. It is imposed on all SSEs paying the tax. Now let's move on to some simple problems. Here we have a person whose income is 13,20,000. He has deposited 10,000 in Public Provident Fund account during the previous year. Now we are required to compute his tax liability if he is of 65 years of age and he has earned 50,000 long-term capital gain. And also we are supposed to be calculating his tax liability if he is a super senior citizen, that is above 80 years. So now the first case, his total income 13,20,000 with a long-term capital gain of 50,000. So his total income amounts to 13,70,000 and his ATC deduction under Public Provident Fund is 10,000. So it comes to 13,70,000, which is reduced by 10,000. So it is 13,60,000, which is the taxable income. Now when he is 65 years of age, for the first long-term capital gain at 20% we are taxing him, and then we apply the slab rate. So from 13,60,000, 50,000 is already taxed, and then the remaining 13,10,000 is going to be taxed. So now the first 2 lakh, 3 lakh is nil, followed by the next 2 lakh which is at 5%, next 5 lakh which is at 20%, and we have a balance 3,10,000 at 30%. So the total of his tax comes to 2,03,000 plus the 10,000 on his long-term capital gain, so it works out to 2,13,000. And we apply the education cess and the higher education cess of 4%, so it works out to 8,520, totaling to a tax of 2,21,520. If he was a super senior citizen, the same applicability for long-term capital gain at 20% is calculated, and then the first 5 lakh is nil, next 5 lakh at 20%, and the balance at 30%. So it works out to 2,03,000 with a cess of 8,120. So it comes to 2,11,120. Now compute the total income of Mr. Kumar for the assessment year. So this is just the total income. So the applicability of tax calculation does not arise. So his income from profession, his income from capital gains, income from casual income, that is from horse races as well as the camel race. So his income totals to 6,97,700. Now, what is the tax payable by Mrs. White if the income is 4 lakh? So we are calculating the tax. So on the first 2,50,000 it is nil. Next 1,50,000 at 5% and the cess of 300. So the tax payable is 7,800. Now tax liability of Mr. A if the income is 1,94,371. We know that on the first 2,50,000 tax is nil. So hence he has no tax liability. When does rebate under section 87A apply? Rebate under section 87A has now been revised to rupees 12,500 for the financial year 2019-20, that is the assessment year 2020-21. This means that if the total tax payable is lower than 12,500, then that amount will be the rebate under section 87A. This rebate is applied to the total tax before adding the cess of 4%. Now going on to the tax liability of Mr. Alok Tiwari for the assessment year given below. The salary income is 3 lakh, house property income 74,000, other source income 1,50,000, he has donated 8,000. So total income of Mr. Alok Tiwari is 5,24,000 with an ATG deduction of 8,000. So his taxable income is 5,16,000. On the first 2,50,000 it is nil. On the next 2,50,000 at 5% and on the balance 16,000 at 20%. So the tax amount arrives at 15,700 plus a cess of 628. So it comes to 16,328 as his tax payable. Now the tax liability of this particular person has been calculated. 3 lakh salary income, house property income 74,000, other source income 1,50,000 and income from donations which has been contributed is 8,000. So the total income 5,16,000, where the first 2,50,000 is nil, next 2,50,000 at 5%, balance at 20% and the next at 30%. So the total 1,47,300 with an education cess of 4%, which leads to 1,53,194. Here we have Mr. K. Murthy, born in 1975, with the following information. Salary income rupees 1 lakh, rent from house property 58,000, municipal taxes paid during the year, short-term capital gain, long-term gain, winnings from lottery, and so on. So while computing the total income, salary income is given. Since the rent is given, the annual value is taken, and From that, the municipal taxes is subtracted. We get the net annual value. With the standard deduction of 30%, we get income from house property. And for the capital gains, we have the long-term capital gain, short-term capital gain, totaling to 1,55,000. Income from other sources, we have bank deposit, government securities, debentures, winning from lottery, crossword puzzles, totaling to 1,52,000. So the total income, gross total income, comes to 4,43,400 less deduction under 80C, which is the Public Provident Fund that he is contributed, and the LIC premium contribution amounting to 1 lakh. So once you deduct the deductions under section 80, we arrive at the taxable income, which is 3,43,400. Now tax is calculated on this amount, which results in, first, the casual income is taxed at 30%. So the lottery winning at 30%, crossword winning at 30%, then the long-term gain at 20%, then shares subject to securities transaction tax at 15%, and then we go for the balance. And when the balance is nil, we have 41,430 as the tax amount, with a cess of 1,657, totaling to 43,087, rounded off to the nearest 10, so it is 43,090. A similar situation where the total income is calculated and the special rates of tax that are applicable are being applied, and then on the balance. So over here we have, being a senior citizen, on the first 3 lakh it is nil, next 2 lakh at 5%, next 5 lakh at 20%, and the balance at 30%, followed by the cess of 4%, and the tax is rounded off to the nearest 10 rupees, so it is 1,46,250. Now the tax liability of Mrs. X, who is born in June 1960, and we also want to know if she was born in June 1932. So if it is 1960, we are doing her calculations, and again if it was 1932, she would be a super senior citizen, so the calculation would vary. So now for the first step, on the long-term capital gain of 50,000, we calculate at 20%, and the tax on the balance 8,35,000. The total income of her is 8,85,000, of which 50,000 long-term capital gain is taxed at 20%, and the balance 8,35,000 is there. So there we have the first 2,50,000 nil, next 2,50,000 at 5%, and the balance 3,35,000 at 20%, with the cess of 4%. So the tax liability comes to 82,680, rounded off to 82,700. And then when she is a super senior citizen, it is again the long-term capital gain at 20%, and then the first 5 lakh is nil, the balance 3,35,000 at 20%, with the cess of 4%, so it arrives at 80,080, rounded off to 80,100. Thank you and happy learning.